The Miami real estate market crash in 2022. I'm going to analyze that today. I'm going to analyze our last real estate market crash. I'm going to compare that to today. And I'm going to show with you whether the bubble is going to burst. I'm going to not make it too complicated, make it pretty easy to understand. Hopefully I don't make this video too long, but you know what? I usually do. Anyway, so let's get into that. I'm going to be sharing my screen a few times. I'm going to share with you some stats. Then I'm going to tell you a few things. And also, I did a video as well, and you're going to see that pop up soon to the right if you haven't seen it yet. And it's going to be a video where I analyze it, not the stock market. Stock market is a bit related to the real estate market, but a video I did on the real estate market crash for Miami and some reasons why not, or whatever. You have to see the video. If I give it away, then it's not a benefit to you because I go into it pretty deeply. Anyway, so let me share my screen. Hopefully, okay, awesome, it's right there. So this is a tool called Trend Graphics. Trend Graphics is really good data. But with that said, I want to share with you some of the things that are, I guess, not great about it. Okay, this only includes real estate stats that are on the MLS. And our team, if you look at the sales of our team, we probably have, I don't know, maybe 25, 30% or more of our sales that are off market. They're new construction properties, and you never find them. Like if you go on Zillow and you try and find our sales, it's not going to be there. If you go in multiple other areas, they're not going to be there. Some of our highest sales and rentals are off market because they're not on the internet because they're called pocket listings, or someone had a property that wasn't on Zillow or these other areas, or is new construction, pre-construction, and it wasn't there. So after saying all that, bottom line is this is a great tool. Trend Graphics is a great tool, but it's not perfect. Okay, so I never want you to think like everything I say is like a Bible, whether it's true or not. I want to give you enough information where you can see trends and you can get an idea and figure out on your own. Because at the end of the day, none of us have a crystal ball. If we did, none of these events would have happened in the past or in the future that are going to happen. So this screen that you're seeing while I've been talking a lot is Miami-Dade County. Because a lot of people that don't know Miami just know Miami like Miami. But just like whatever area you live in, if it's not in Dade County, you're going to have areas like that are hyper local. So in Miami, it's not just Miami. You have Coconut Grove, you have Coral Gables, you have Alapata, you have Wynwood, you have Edgewater, you have Midtown. You have all these areas. And I'm going to shout out a shameless plug for one thing that we did create. It's if you go to miamineighborhoodguide.com, miamineighborhoodguide.com, we break down all these hyper local areas. So there's probably like 35 or 40 of them. And in each area, we break it down to make you an expert in the area. Because we know a lot of people are moving to Miami, or the ones that live in South Florida may not know Miami as well as our team does. So out of these 35, 40 different areas, in each area, we break it down where you should, the best places to eat, the best places to get dessert, where to shop, things to do, also things you may not know about the area, an overview of the area. And the last thing is a neighborhood video. So drone video going through the area where you see homes, you just get a sense of how it is to live there. And so we've been working on this for 16 months now. It's around 16 months, give or take. And we're probably 80 to 90% done, but I didn't want to just wait till we're 100% done. I figured we have enough information to share with you guys. So again, miamineighborhoodguide.com. So this is basically our commercial within our video. So make sure to check that out, miamineighborhoodguide.com. So what you're seeing here is Miami-Dade County. This is our last real estate market crash. So back then, and this was, I don't know how well you guys could see how big, if you're seeing this on your phone or on a laptop or desktop or your TV screen. But anyways, this says 1207, so December 07. So you could see the market was starting to crash at that time. You see the inventory, it's getting more and more and more. So this green is the units for sale, okay? The darker green are the units that were sold. So to give you an idea, in December 2007, when we were starting to trend downwards, when we started to crash, there were 38,000, I guess I should put my phone on mute. There were 38,000 homes for sale. And so these homes are single family homes, condos, townhomes, villas. Villas are like single story townhomes. So basically residential real estate for sale. There were 38,415 properties for sale. This red line, which is sort of hard to see, shows that at that time you had 38,000 properties for sale. You had 764 that were pending, meaning have an offer accepted. Doesn't mean it's going to close, but the seller accepted an offer from a buyer. And there were 700, and if I'm not mistaken, 762 properties that actually sold. So if I do the math, I'm going to do the math. So I'm going to look down on the screen. So sorry about that. So I'm going to do the math. If I go 762 divided by 38,415, it was basically less than 2% of the inventory was selling per month. Okay. And when I talk about crash, one of the reasons the market crashed back then was our inventory just kept increasing. So many banks were going out of business because they were doing these stated income loans. A stated income loan is basically someone that has great credit, say they have a 750, 800 credit score, FICO, Beacon, whatever you want to call it. So they had a 780 credit score back then in 2006, 2007. At that time, even if this person was a waiter and they couldn't prove their income, and nothing against waiters, they're some of the hardest working people around. But if that waiter made, I don't know, say they made 40,000 a year and they couldn't prove their income, whatever, or maybe they could, and they made 40,000 and they wanted to buy a $800,000 home, obviously someone that has a $40,000 job, 40,000 a year job is not capable of paying what an $800,000 property cost if they're financing it, meaning, because of the interest, the principal, the taxes, the insurance, there's no way they can afford that. But back in 2006, 2007, 2004, 5, 6, 7, I got into real estate business in 2004. And at that time, they had stated income loans. So we had people that had great credit that didn't make that much money or couldn't prove what they were making, but they were buying a home significantly higher than what they qualified for, because it's a stated income. You would state your income. So these people, a lot of people, they made 40, 60, whatever they made per year, they would say they made a lot more. Their credit was good. They were able to buy an expensive property. And then because our market was appreciating so quickly, they were able to sell it at a profit. But at the end of the day, what happened is there were more and more foreclosures that were starting to take place because the market started to shift a little. And what happened is people got caught, quote unquote, holding the bag, meaning they had this very expensive property, they couldn't afford to have it, and they just gave they just told the bank, just take it. We don't need it anymore. We can't afford it. Plus the market was depreciating. It was a lose-lose situation for everyone. So in this case, if you see, I mean, I'm looking at, there was an inventory of 42,000 properties on the market with, when you're only selling 1187. Let me see what that works out to. I'm a math nerd, so a lot of times I like to just do numbers. So 1187 divided by 42,031, that's like 2.8%. So even though the percent of properties sold a little bit more in December, and keep in mind, December is Christmas time, January, over that time, it's people are spending money on gifts. They're not really thinking about buying homes usually. It's the middle of the school year. I mean, there are a million other things, but that's what it was. So if you see, we had from 38,000 to 35,000 homes and on the market for sale with a max of 1,400 sold. Okay, so 37,000, 1,400 sold. So I'm going to go to today. Let me go to today. And let me see. And I'm going to pull out another time as well. So if I pull out today, the market is significantly, oh, I got to press. I want you to see this before I hit to change it. So again, 38 to 35,000 properties for sale, at most 1,500, 1,490. Actually, yeah, 1,498. So 37,000, 1,498. So I'm going to switch this now to today. Let's show the chart. It's pulling up. So now instead of 30 something thousand and 40 something thousand properties for sale, you could see our inventory is just dwindling from 13,000. We now have only 7,000 properties for sale. So compare that to 38,000 and 40 something thousand for sale, and only at most 1,500 sold. We're at 7,000 for sale, and we had 3,000 that sold. So if I take, back then it was 2.8%, was in the best month, 1,498 sold, 37,000 on the market, only 2.8% of the properties for sale sold. But if I do the math here, let me see, I go 3,102 divided by, I sound sort of excited, and I guess I am. I love real estate. If I do that, 41.4% of the inventory sold per month. It's huge. You have 2.8% to 41.4%. So anyways, but what you do see, and I don't want to make it seem like there isn't going to be a shift in the market, because there is slightly, okay? And so you see our inventory is starting to slowly increase. It was up, it went down a lot. And I got to say, I've been in real estate 18 years, and today's June 9th. This year has been the busiest it's ever been in real estate. Our team has already sold probably, I don't know, 40, 50 million already this year. And that doesn't mean we're great or anything. We're just okay. But it just shows you how busy it is. It's not even half the year done, and we've sold so much. Okay. But anyways, not about us, back to the market. Sorry, sometimes I throw that in, apologize for that. But anyways, you see the inventory trending up. And what you see, if you look at it closely, you see there were 6,549 properties for sale and 4,000 sold. You see 6,500. So you see an increase in the amount of properties for sale and a decrease in sale. Another increase in properties for sale, a decrease in sales. So we're starting to see a shift. But let me tell you this, let me analyze the market. I'm going to turn this, let me see if I can share a little bit before COVID started. Okay. Because obviously COVID was, a different time. So let me see. So COVID pretty much started, and there are many different ideas, but like most people knew of COVID in March of 2020 because of the NCAA Final Four. They shut it down. The NBA started going in a bubble. All these sporting events changed. A lot of times people see that. So I'm going to go from, I'll go to May of 2020. This chart is going to be March of 2019 to May of 2020. So let's take a look at that in a sec. So if you see back then, 23,000 homes for sale. Like I said in the other one, we're at 7,000, and it was, so 7,000 is, less than, if you take 7,000, multiply by 3, it's still less than 23,000. Okay. So it was the inventory back then was in the 20,000 on average. And the sales were, they were low at most. You're getting close to 3,000, 2,500, 29,000, 2,500. So you see, if I look at those numbers, let me see, I'll do the math. So I'll find the month where we sold the most, 2938, okay? So if I look at 2938, which was in May of 2019, and I divide that by 22,424, 13.1% of properties were selling at the best at that time of this graph from March 2019 to May 2020. So it's a huge difference. You see what that number was again, 13.1%. And when I did the math on the last month, when we are starting to shift, it was 40% of the inventory was selling. Such a huge difference, okay? So with that said, I'm gonna stop sharing my screen. So with that said, it tells me a few things, and sorry to get into the data more than I wanted to. Hopefully it gave you an idea of the trends, how different it was back in 2007, 2008, 2009, compared to now, how the market is in terms of numbers of homes for sale, numbers that are selling, the pending ones, and also the percentage of properties that are on the market that are actually selling. So with that said, I'm going to tell you what's going to happen in the future. And this happens with every market. Okay. So first, do I think that the bubble is going to burst? I think the bubble is going to slowly deflate. It's not going to burst. It's going to slowly deflate. And this is the reason why, because a lot of people talk about bubble bursting. They talk about, is there a crash? But hardly anyone tells you what's going to happen next. They'll just say yes, no. They'll put a title to get you to watch the video or to read the data. And after you read it or watch the video, you're going to be like, man, I didn't learn, crap. I didn't learn anything. I spent like all this time. This person got a lot of views, but nothing happened. I didn't get educated. So in my best, easiest way, and I know like a lot of people that watch our videos are very knowledgeable, and some people have no knowledge, which is okay. So hopefully this relates to everyone. So what happens like in the market? So I'm going to share with you like back during COVID, what happened during then, and what's going to happen in the future. And just a quick overview. Okay, so back before COVID, we just had a regular real estate market, as you saw with the data, 20-something thousand homes for sale, maybe 3,000 to 5,000 selling a month, whatever, normal market, nothing crazy. We had higher inventory in some areas, condos, we had a lot of condos for sale. The single family home market was a lot hotter, actually, way less inventory. So then COVID happened. And then so for the first few months, the market slowed down tremendously because we were in a time where an unpredictable time where people didn't know what to do. They didn't know if they were going to keep their jobs. They didn't know how long COVID was going to last. They started we didn't have a vaccine or anything. So the amount of deaths was ridiculously high. And at that time, I remember like coming home from the supermarket and I'm using the Clorox on the boxes. I'm doing everything I can because we didn't know that much about COVID. And so at that time, with anything in life, when there's uncertainty, there's a hold on things. You know, if you want to marry someone and they're uncertain of whether they should marry you or not, they're not going to make a decision, or the decision will be no, you know? So when there's uncertainty, there's always a delay or a bad situation sometimes. Okay. So with that said, after a while and people were stuck in their home, they're like, screw this. I want a bigger place. If they're living in condos, they want single family homes. They just wanted more room because they were stuck in their home for so long. And so what happened is everyone and their mother and their brother and sister started looking to buy homes. So we had a ton of people looking at homes. And at that time, the inventory, a lot of people took their homes off their market because they didn't want to sell their home because they were still a bit uncertain. So what happened is this: we had the people coming into the market to purchase homes. It was like a normal market. Some people were doing FHA loans. They were putting 3.5% down. Some people were doing conventional loans, 5% or 10% down. Some people, the military that we're so lucky to have, they were doing their VA loans, which they deserved, 0% down. And they were also competing against people that were paying cash. In Miami, typically we have 30 to 40% cash transactions, depending on the year, depending on the time. Sometimes it's higher, sometimes it's lower. But bottom line is we have a lot of cash transactions in our area. Sometimes it's even 56 to 60%, depending on that hyperlocal area in Miami. Anyways, so we had a regular market. We had all different types of buyers, people with different types of down payments, some people paying cash, some people putting heavy down payments. And in the Miami market, that's what we had. So they were looking to buy. Everyone, all of a sudden, no one wanted to buy, then everyone wanted to buy. But then what happened is these people with less down payments were competing against people with huge down payments or a lot of cash transactions. So what was happening is all of a sudden you had these people putting 5, 10, 15 offers and not getting their offers accepted. So what happened with that is they got discouraged and they stopped. They still wanted to move, but they knew they couldn't buy because they put in so many offers. And at that time, because there were so many cash offers, and the reason there's so many cash offers, just so you know, in case you're wondering why, we have a lot of people that are moving to South Florida, to Florida, because we don't have a state tax. So these people, a lot of these people are moving from California, the Northeast, Chicago. They're moving from areas that where they make significantly more money than Miami in the past. Now it's getting closer. But so they have these jobs that they're getting paid a lot more. They can work remotely now, or even if they're not working remotely, by living in Florida each day, some of them are saving hundreds, if not thousands of dollars in taxes. So all of a sudden we have this glut of people moving to Florida. If I'm not mistaken, in 2020, we had 300,000 people move to Florida, a huge number. So these buyers that are putting in their offers are competing against people that have, quote unquote, a higher quality offer, higher quality buyer to a seller, meaning these people are paying over asking. There's no appraisal contingency. They're waiving their inspection contingency, and they just need the property. Because there's such limited inventory, more and more people start getting discouraged, continuously getting discouraged. They're spending hours looking for properties. Their agent, our team, we're calling the agents. A lot of times these agents, unfortunately, I'll sugarcoat it a bit, are too busy to answer our calls or return our messages or emails, and because they're getting inundated with requests to show their homes. their listings that they have. And people are getting discouraged. They're looking forever online. They're finally finding the right home. They're giving us a list of 5 properties they want to see. We're calling up agents, and maybe we can show one, and that one has 20 offers on it, and it's selling for way over asking, and there's no appraisal contingency. It's cash, or it's a finance deal where there's no appraisal contingency, no inspections. So people are getting discouraged. So they're pulling out of the market. So what's happening now is our market is, because interest rates are higher, and basically the shift from 3%, low high twos, low threes, from that to like 5.25%, that's going to roughly change the buying power of many people 20%. So give me an idea. If you were buying a $500,000 property back in January, February, before the rates started increasing, and it was at 3%, give or take, and you can afford a $500,000 home, all of a sudden, everything's the same. Your credit's the same, your down payment's the same, everything else is the same. But because the rate is a couple points higher, all of a sudden, you qualify for a $400,000 home. So all these homes that you were looking for, you don't qualify for anymore. So that started to shift the amount of properties being sold. More properties are staying on the market, even though our properties on average are selling for asking price, if not more. I mean, just the other day, we put a property on the market like 2-3 days ago. It was a condo in Brickell in Miami, close to downtown. And it was a 1-bedroom condo, 800 and something square feet. We put it on the market for $550. We did our analysis. We thought $550, we were overpricing it, but we had to increase the price because, after speaking to our seller, the seller said, we have too much activity. I think we can sell it for more. In this market, it's hard to determine what the value of a property is until you put it on the market. So the good thing is, if you price it too low, quickly that you're going to get more than what it's worth, and you're not going to mess up. So in this case, it was $550. We increased the price to $590, and we already have offers over asking price, on the property with no contingencies. So anyways, the market is shifting. It still is busy, but more and more people that are financing, if they were looking at the high end of their budget and they were at, say, $1 million, and now they qualify for 800,000, there's a smaller pool of buyers. So there's a smaller pool of buyers. So what that means is, because there's a smaller pool, you have less people to buy the property. And because you have less people to buy the property, you're going to have more properties stay on the market. You're going to start to shift. But the thing that most people don't talk about, most agents, most things on the news, whether it's on social or you're reading an article or whatever, people don't talk about the cycles. So what happens is, it doesn't just like get higher and higher and the bubble just bursts and it stops. What happens is, a lot of those people that were discouraged in the past, that couldn't buy a property, that weren't at the peak of their budget. So I'm not saying the people that were looking for a $500,000 property, that were doing, a smaller down payment loan, are going to come back in the market, because they can't, because they don't qualify for the same amount. But most people aren't at the limit of their budget. Most people are going to do, like, I don't know, 70%, give or take, of their budget. Some people will do more, but on average, people aren't going to go to the highest number that they can afford. So these people that weren't at the peak of their budget, now all of a sudden, they're competing with less people. There are less people that are trying to buy properties. And the other thing is, they have more of a selection. As more homes come on the market, they may have a chance to find something else that they like, because there's more to select from. And they have a better chance of getting their offer accepted. We're not there yet, but that's what's going to happen. So in the beginning, what's going to happen? So going forward, we're going to start to have less cash buyers. Then after we have less cash buyers, the deals that are getting, and so give you an example. So instead of 35, 40% of all the sales being cash, maybe you have 25%, maybe you have 30%. So then people now with higher down payments that weren't getting their offer accepted, now are starting to get their offers accepted. So those type of buyers, those sort of transactions are getting absorbed. Then the next thing that happens, and it's sort of basic, the people with slightly less down payments, their offers are gonna start to get accepted. And as it keeps trending, all of a sudden at the end, the FHA buyers are gonna get their offers accepted. We're gonna be in a more normal market. And is there gonna be a crash? No, there's not gonna be a crash. There could be a crash if something happens that we don't know about yet, meaning like, I don't want to say anything bad, but if something terrible happens, something that we don't know now, of course, I mean, that's with anything in life. But if things continue going forward the way they are, even with the ridiculously expensive gas, even with the ridiculously expensive groceries and stuff, even with that, that's where we are, and hopefully it changes. But with that said, even if that continues, our market is not going to crash. It's going to deflate. The Miami market. I'm not talking about other markets. I'm talking about the Miami market. The main reason is we have a ton of people moving here from areas that are used to spending a lot more money. Also, the other offers that were worse, quote unquote, worse quality offers or buyers, and I hate to say that, but to a seller, their offers are going to start to get accepted. So it'll be a gradual change. Prices aren't going to go down for the most part in areas where it was like highly speculative, very, very few end users, where it's just investors. Yeah, of course, those are going to probably dip a bit. But for the most part, if it's going to be an area where just a normal area, the prices are still going to increase at a slower pace, but they will increase, and our bubble will deflate. It won't burst. So hopefully that helped you. Hopefully this, I guess, long video, I do my best to not make these long, but I whenever I speak with you, and I mentioned that in all the videos that Jade, I, or the team do, we hope for you to look at us as having a conversation. We don't want it to be, some of our videos are highly edited and we do our best to make them look really great. But if I, and maybe they're not really great, but we aim to do that. But when we do videos on market updates and stuff, our goal is to get the information out first and not worry about all that editing. Because at the end of the day, I would think you would rather have the information up front than see the video look better. I mean, obviously, I guess some of you don't know, this is a fake background. This isn't my house. That's the Compass, one of the Compass offices in New York. That's where I get it. I Googled it, found it. I've been using this for like 2 years. So that's the background. But anyways, we'd rather get the information out to you first, sooner. If there are areas that you like, that you're interested in, that we don't talk about, if you want just an insight. I got a call today from someone, and I don't even mind helping others that aren't doing business with us. This person wasn't doing business with us, and it's okay. And I'm not going to overstep your agents. I'm not going to try and get your business if you're working with someone. But if you have a question and you want to get a different perspective from someone else, me, the team, and you want to know about the market, we'll be happy to tell you our thoughts. It doesn't mean our thoughts are better or worse than your agents. It's just another opinion, and you can decide what to do based on that. So anyways, thanks so much for watching. If you haven't subscribed to our channel, make sure you do. Hit that notification bell so you can get our videos as soon as they're released. This is my pitch to you. If you are looking to make a move to Miami or sell your home in Miami, our team would love to help you. You know, we work all different price ranges. Last year we did a rental for 1,500 a month, and Jade did a rental for 120,000 a month. So all different price points. We've sold properties for 150,000 and many, many millions. So we do our best to help everyone. So we're not too, your home isn't too small or too big for us. We'll do everything we can to help you. Go to our website. It's allinmiami.com, allinmiami.com. Thanks so much for watching. Have a great day. Love you guys. All the best.